And now, unbiased and independent, here is your Manhattan Weekly Market Report with Noah and John from UrbanDigs. Hello, everybody. This is Noah and John, and we are from UrbanDigs. It is Friday, so you're going to get your weekly Manhattan market update. John, let's get right to it. We're in the active season. Things are happening. Things are percolating. I'm looking at supply. We're over the 6 handle, 6,026. It's definitely going to go higher from here. Johnny, show me that chart.
That's true. We are kind of ticking higher. We're up nearly 2% on the week. We are over the line set last year. And again, as you pointed out, back over 6,000. So it looks like supply has righted itself and we're starting that slow uptick into the listing season.
Yeah, and I don't expect it to be a heavy listing season. I actually would be surprised if we actually get over historical trend, but it has started nonetheless. So let's just see where this plays out. Johnny, let's shift over to demand pending sales, 2,191 things that are in contract pending. Johnny, show me that chart.
And again, here we are. We're down another 2.5% on the week. And this is, a continuation of a long-term trend set, 9 months or so ago. And bear in mind, no, this is a lagging indicator. So as things go out, they're not really replaced until contracts get signed. And we're not expecting sort of an influx of those really until what I would say February at the earliest, really more March, April. So expect this sort of indicator to keep on ticking down, maybe starting going sideways in a bit. But right now, the demand indicator on Manhattan looks a bit flat.
Yeah, the demand indicator is flat, but anecdotally, and I know that doesn't mean much, anecdotally, I will just report. I mean, I do a lot of meetings across a lot of firms, and I am hearing of a lot of buy-side activity. And you guys know how this works. What's anecdotal or ultimately turns into bids, ultimately turns into signed contracts. And then later on, the brokers update the systems. That's when we get the data, and that's when we show what's going on. So this is a very interesting report from a wide range of different agents and firms across the industry. And I just want to point out, John, we are deep in the buy zone. We are in the buy zone right now. Okay. Just like COVID, there's 3 sections of the buy zone. You can buy when you're going down, and that's when fear is high, and you could probably get a gap down bid hit. Not a lot of sellers do it, but that's when you do it, when that fear level's high. You can buy when things are starting to stabilize or go sideways a little bit, or you could buy during the recovery, right? And of course, if you're buying in the recovery, the market has shifted, and you may not get that leverage advantage that good brokers are trying to tell their buyers today. Hey guys, you got the leverage advantage. So buyers, you are in the buy zone. This has been ticking down, not because demand is going down. It's ticking down because the new listings are coming on faster than the deals are coming on. But if those anecdotes are going to turn out to be correct, guess what? You're going to see this ultimately start to pull higher. And that means the leverage advantage from buyers is going to start to go away from you as we get to that mid-February and March. So buyers, you're in the band, you're in the buy zone, pull the trigger if you get a deal. Don't wait for the activity to catch up to you. Johnny, let's go to the weeklies, see what's happening there. I'm looking at 1 week supply, 260. That's actually down 10%. Johnny, show me that chart.
Yeah, and this is where I think, everything you're talking about the buy zone, this is sort of where the rubber meets the road, because this is where it gets interesting, because you're looking at where these weekly new listings are coming in, and we're down, as you said, down 10%. And when you look at the chart here, you can see that the bars this year so far are weaker compared to other years. So even though that broader supply mix, right, we're back over 6,000 on the weekly level, it's still on the weak side. Now, if you're a buyer, why does this matter? Well, because this is really the pool of listings you have, and if that's starting to not come in as fast, well, you may be faced with more competition faster. And as we look at the weekly contract signs, we might get an idea of that.
Yeah, and that's exactly the point. I mean, I don't think sellers en masse are thinking they're going to get their bid. So that new listing activity is just coming on sluggish. And I think this is going to be a narrative for the next few months. And if inventory is tight, when that demand pops back for the seasonality, you're going to feel it in the market. Johnny, I'm going to look at those contracts signed. They're up about 32% at 151. Is it starting already? Johnny, show me that chart.
Yeah, and that's up. That's the thing. They're up roughly 40% on the week. So demand, the supply side week was down 10%. The demand side on the week was up close to 40%. And so you kind of put those two narratives together, and it suggests that the demand pace might be growing faster than the supply. Now, again, this is only in the last couple of weeks, but you look at where contract signs kind of want to be in the next couple of weeks. They kind of want to be around that 200 level. At least that's where they've been for the last few years. So we have some room to grow on the upside there. But at the same time, on the listing side, where the listings want to be, they kind of want to be around the 300 level, but we're still shy there. So we're heading into a more demand focused era, and the supply is just not catching up right now. So again, you go back to the buy zone, and that's it's going to be crunch time perhaps soon.
Yeah, we're getting, again, don't expect that to keep going down in that market pulse. I think it's going to be in the timing band to kind of find that bottom and turn around. And, I love looking at the 1 month ticker, and this contract sign number. I don't want to Pollyanna anything yet. All this activity I'm hearing anecdotally is inquiries, activity, buy side visits, bids, et cetera, et cetera. There's a 2 to 3 week lag before deals get signed. And this number right here, it is going up, which is great, but this should be at 765 by the end of the month. And I'll be surprised if we get to that level in a couple of days. We'll see what happens. And Johnny, let's now go to the chart du jour, where I know that you're looking at the luxury sector, and we're asking this question: has the luxury sector found its bottom? Has it found its way? And we got this lovely chart showing you deal volume on a monthly basis. That's those blue bars. Deal volume on a monthly basis on the luxury sector, over 4 million. And you can kind of see, if you look at the black line, try to focus on that black line for a second, you could see that we were up at this level for a long time. Great liquidity for sellers. They had a great run. And we've shifted down, and now look at that black line. It's starting to form a bottom. And when that slope starts to change and normalize, that is technically a signal that that bottom formation, you're going from deceleration to potentially receleration, and that's causing it to curve like that. And again, that is a buy signal. And you put that piece of the puzzle together with the inventory trends, with the seasonality trends, with the anecdotal trends. And again, I think you're in the buy zone, and this is probably the area where buyers are going to have their peak leverage for this part of the cycle, Johnny.
Yeah, I think you're right. And I think, the missing ingredient here is really sentiment. And you think about that dark line, that's that rolling average rolling over there toward the end of 2022. And what's the sentiment there? Well, the sentiment on the sell side is, oh my gosh, how come I'm not getting any deals done? And that's because it's actively declining. Every month you're seeing fewer and fewer contracts signed. From the buy side, you hit August, September, October, those months, and you feel like you have a hefty bit of leverage because sellers are realizing that the market is, as they knew it, is no longer there. I think we're entering a period of sentiment shift where we've seen sort of, if you look at what the history of this normal, excluding COVID, you look at sort of the history of where this number bottoms out, it's pretty close to here on the luxury side. So going into these busier months, you would expect those blue bars, the contract signed for luxury, to start increasing. And what that's going to do is going to put a little bit more wind behind the seller sales and make buyers compete a little bit more. So you talk about that buy zone, you're here before the sentiment shift. It does make a lot of sense.
Well, very, very interesting, Johnny. I love that take. And I'll just point out that, it looks like we're at around mid-2019 levels, which again, at that moment in time, before the pandemic, you couldn't predict that. That was showing some signals of a buy side. And sure enough, that turned out to be a nice time until 2020 hit and something else happened. But Johnny, this is great. It's a great take. It's a great look. And again, I hope buyers are getting this message. I hope brokers are sending this message with the data to back this up, considering where we came from. I mean, where we came from, the move happened. So John Walkup, thank you for pulling all this data together. I know everyone is appreciative of it. I am Noah Rosenblatt. We're both from UrbanDigs. And don't forget, guys, you got questions, we got answers. Please visit our forum right down there. And if you want any of the reports that John just whipped up, they'll be in the premium section right over here in a few minutes. Other than that, this has been your weekly Manhattan Market Update, and we'll catch you next time.